Hello friends, we welcome you all to your own YouTube channel Finance Made Easy, where we discuss finance, investment, stock market related topics, news and strategies so that we can all become aware and a good investor from young age. So, without further ado, let's get started. This is one of the most challenging aspects for an individual when he or she starts his investment journey. So, let me break down how a good financial plan should look like and what are the two important characteristics of a good financial plan according to me. Number 1, the plan must be easy to execute. If the plan is complex, includes too much paperwork, and requires keeping track of multiple things, it will be hard to follow. Number 2, the plan must have a balanced risk to returns ratio. This will vary from individual to individual and personal risk appetite and income. Let me break down 5 key aspects of an individual financial plan according to me. First should be your insurance plan. Second should be your loans and EMIs. Third should be your savings plan. Fourth should be your retirement plan. And fifth should be your investment plan. Let's take a look into each of these aspects one by one. Number 1, insurance plan. If you are also confused about which insurance plan you should opt for in today's world where choices are endless, like life insurance, health insurance, accidental cover insurance, term insurance, critical illness insurance, or general insurance, etc., let me make things simple for you and provide you my perspective. A good practice will be to have life insurance only for the earning member of the family. This will mitigate the risk of financial instability of the dependents in case of some mishappening to the salaried member of the family. Unlike life insurance, I think every member of the family must have a health insurance as diseases and illness are inevitable and having a health insurance will provide a financial cover for the same. For the amounts, in my opinion, life insurance should be equal to 20 times the salary of earning member and health insurance should be around 2 to 3 lakhs per annum per family member. Second, loans and EMIs. I classify loans and debts into two major categories, good debt and bad debt. A good debt is low interest debt like home loan, which is around 8% per annum and also helps in tax saving. A bad debt is like a high interest debt like a credit card EMI, which is around 30 to 40% per annum and are recurrent debt traps. A good practice should be to pay all bad debts as soon as possible because repaying them will be equivalent to earning 30 to 40% interest on your money, which otherwise is the percentage of interest which you will be paying to the banks. The third key aspect of a good financial plan is savings. In my opinion, every salaried employee should save 30 to 40% of his monthly salary. An important part of this savings is the emergency fund, which should be equivalent to your 6 months' salary in a bank fixed deposit or savings account in case of an unforeseen event like a job cut or a recession. If you have maintained your emergency fund, then rest of your savings should go into investments, which we will discuss later on in the video. Fourth aspect of individual financial plan is retirement planning. Two of the most prominent ways of maintaining a retirement corpus for salaried employees are NPS and EPF. Let's talk about each one of them briefly. EPF or Employment Provident Fund provides a fixed and stable return of about 8 to 8.5% and can be withdrawn as lump sum on retirement, whereas NPS or National Pension Scheme provides a little high return of about 10% but gives the flexibility of monthly payout post retirement. Now comes the fifth and final part of our financial plan, which is the investments. If you have taken care of the previous four aspects of the financial plan, like insurance planning, retirement planning, the savings, and loans and EMIs, you are good to go ahead with your investments. For investments, there are two major categories of instruments available, which are equity and debt. The different debt investment options that are available to us in India are government bonds like Kisan Vikas or NSC. They can also be corporate bonds, which are a little riskier than the government bonds but offer a little high return. Also, one of the options we can look for is sovereign gold bonds, which are a good way to hedge your investments in commodities like gold if you consider diversifying your portfolio. Now let's take a look at equity options. Let me tell you a quick difference between debt and equity options. Risk-averse investors for their short-term goals should always go for debt options, and aggressive investors for their long-term goals should go for equity options. Long-term, I mean around 7 to 10 years. In equity investment options, we can further classify into investment in stock market or investment via mutual funds. A key difference between both of them is that stocks are highly volatile and more risky compared to mutual funds, which provide diversification via maintaining a basket of stocks in each of their portfolios. So, if you can maintain the high volatility of stock market, you should invest a small amount in shares directly, else you can go for diversification via mutual funds, and that too in different categories like large cap, medium cap and small cap mutual funds. We will discuss about each of these funds in detail in some other video. Recently, many AMCs have introduced hybrid mutual funds, which are a combination of debt and equity instruments. So, if you are an investor who doesn't like to think about what percentage you should invest in debt or equity in your portfolio, you can go ahead with the hybrid mutual funds, and the fund manager will take care of maintaining debt to equity ratio as per market conditions. So in this video, I have tried to break down a financial plan for a young investor into 5 key aspects. If you take care of the mentioned 5 aspects in the video, I think it will provide a solid base for your future financial investment journey. So friends, I hope you find, as I have shared the tips which has helped me personally to start my financial journey. Also, if you like this kind of content and want to be daily notified with the stock market, finance and investment related news and topics, please subscribe to our channel, press the bell icon so that you never miss an update from us, and like and share this video with your friends. So until next video, goodbye, take care and happy investing.